Hello and welcome to the ECB Rate Decision Preview with ATFX. Interesting times this week for the euro, interesting times for the ECB, interesting times for the global markets. My usual caveat, as we know, in the last 6 months or so, is we have to take into account when we're looking at the euro dollar, when we're looking at trading opportunities, everything that's going on in the world around us, and moves are still being dominated by tariff impacts and how that's going to affect various jurisdictions. And at the moment, the EU and Europe as a whole is front and center in line with what the US are doing. So even though we're looking at these underlying fundamentals with the ECB rate call, expect what's going on in the greater world with regard to those tariff updates and trade updates. And if those tariffs do get implemented on European goods, if they're higher, if a deal gets done, expect more volatility from that in the short term. In the longer term, we have to look at this data that's coming through. We have to look at these moves that we get from the European Central Bank and other central banks, because this is what's going to give us our longer term trends and once everything's settled down. And I think a lot of people are on the same boat as me on this. But short term, we're still getting hit by geopolitical influences. Longer term, we will be going back to the fundamentals, and obviously one of the key fundamentals is what central banks are doing with interest rates. Hence why it is so important to keep an eye on what the ECB is doing. We've had some good updates from ECB President Christine Lagarde over the last few weeks. The market is fully pricing in a cut from the ECB this week. That is also expected to be the final cut at the moment for a year, with only a 30% chance now being priced in that we might get another one. That will vary as we move through the next few months, as data comes out, as we get updates on all the trade machinations, I suppose. And that's something that we've got to keep in mind as well, where we're trading. So what we're going to do today, we're going to look at what's the potential that we're going to get from the ECB, and it's a few sessions away, and where there's going to be some trading opportunities, both in the euro dollar and in some of the euro crosses. And as always, please feel free to subscribe to our channel. We'll keep you updated with everything that's going on in financial markets. And here we are on the daily chart for the euro dollar. Now, as I said, the ECB is fully expected to cut rates by 25 basis points. It takes us down from 2.4% to 2.15%. And normally you'd expect, all things being equal, that a cut would put pressure on the currency, because we're seeing interest rates come down. Now, let's have a look at this. As I said, this is a daily chart. What have we seen since the beginning of the year, when we hit a low around about 102? Massive increase in the euro. And even when we've seen weaker data recently, and inflation did come in slightly lower across the eurozone, down to 1.9%. So below that 2% that the ECB and let's be honest, most of the major central banks are looking for. So you would expect a cut, and I think that probably locks in the cut. Most of the economists out there, quizzed or surveyed, I should say, rather than quizzed, expect this 25 basis cuts to come through. So I think from a trading opportunity, unless we did get no cut or a 50 basis point, we're going to be looking at the updates that we get from the rate statement and from the press conference with ECB President Christine Lagarde later in the day, and how much of an indication they give us moving forward, or whether there's another cut coming. As I said, about 30% priced in so far through the second half of the year, or whether they're going to hold. Let's be honest, most of the market's expecting the wait and see that we're getting from a lot of central banks, including the Fed and many others, because they want to see the impact of the global trade war, tariffs that's going on at the moment, and they want to see how data is reacting to it. So far, and if US job numbers are anything to go to overnight, most economies are remaining relatively resilient. So main point on this release is we will get the main refinancing rate, the interest rate. That will be announced alongside the monetary policy statement. And then I think we've got half an hour gap between that and the press conference. And sometimes we can see a lot more volatility from the press conference than we get from the prepared statement and obviously from the rate announcement. So let's have a look at trading opportunities. Euro is sitting near good resistance levels. Now, it backed off a tad overnight. But here we can see on these longer term charts, resistance coming around 115.50 and the recent high 115.74. So if we do get no cut, that would see the euro moving higher. I would expect it to break these levels and then open up the way for a move higher through to 120. And then these highs are the next target all the way back from 2021. He's waiting for his chart, 122.70 there, and I think just slightly higher back in early 2021, 123.49. So that's the next target for the longer term traders. If we start to see the euro moving higher, it will probably coincide with the dollar weakening further, but we are close to those trading levels, and we are close to that resistance level. So longer term traders will be looking at that. But really, what we're looking for the shorter term traders, we'll probably look at on the closer charts, and that takes us over to the hourly chart for the instant move back from what we can see from the euro. So here we go. This is the euro hourly chart. As you can see, not a particularly fantastic line, but these are the recent highs. So trend line resistance coming in around 114.50. Then we've got 114.54, same levels that we had before. And then we've got the annual high, same one I talked about before, 115.73. That would be the target to the top side. Now, if we got an extra cut, very unlikely, I feel, 50 basis points, we would crash through this 200-day moving average, and we would be targeting these shorter term support levels down at 111. Where I think we're really going to get these moves is where we get an update from the statement and from Christine Lagarde. If it is wait and see, it's not locking in that cut. So maybe we do see a move to try and challenge these highs here. And it will depend on the way the market's moving. And to be honest with the euro dollar, it will depend on where the euro is going at that time. So opportunity to buy the break on this resistance trend level, that will take us up to these levels. A break here again, it's the same levels that we saw on the daily chart. Take us up towards that key 120 psychological resistance level. Easy for some to say. And then those higher levels that we discussed earlier. Obviously, if we get, and we're getting this from a few central banks recently, and they're calling it a hawkish cut. And that's coming with that wait and see approach. It's like, yes, we've cut, but we think we're done at the moment until we get better reasons to cut again. That could see harder moves in the currency as well. So that hawkish cut, that takes us higher. A bearish cut would see Christine Lagarde probably coming out and saying, look, we're cut and we're preparing to cut again. If inflation continues to fall, this would take us lower. That would challenge those levels here. Now, I'm just going to skip over to a couple of the crosses. Most of them are sitting mid-range, but there's a couple that are sitting at quite key resistance and support levels. If we get breaks there, we could see some really good moves. So these are all the longer term charts. I've moved us over to euro sterling. Mid-range here, don't expect too much. It is a good trade. It will be a longer term trade, but recent highs in euro sterling 84.50 all the way back up to that 87 level. Obviously, if we're seeing a more hawkish cut, it could take us higher. I don't expect too much more than this 84.50 instantly after the move. Support coming in around 82. This is the one I wanted to show everyone. Euro yen is sitting at a very interesting level. If we get confirmation of more cutting from the ECB, we're also looking at the Bank of Japan for being a little bit more hawkish. We are sitting on a longer term charts, very close to resistance level. I will bring this in a little bit so we can see it a tad closer. We're at 163.68. This is a longer term chart, as I said, 164. So less than a big figure away. If we do get a bearish cut from the ECB, we could see this move start to accelerate. That move will also coincide when we're looking at the yen. We are going to be looking at yen as a haven currency. This could be the move that a lot of the longer term players are looking at. Obviously, you can sell in this region here with a stop loss above the resistance trend line that comes in nicely from there, and then those highs that are above 165. So that's the one I think there's a bit more opportunity for some moves on the crosses. And I'll just skip you over to the Euro Aussie as well. That's had some massive moves, and it always does when we're in this sort of risk on, risk off environment, but we're kind of sitting middle of the range now. So expect moves. I would expect 177 to cap it in any immediate move, and then probably just under 175 to keep us off of any of that downside move. So there we go. Plenty of trading opportunities coming up on the ECB. It's all going to be about, as long as we get that 25 basis point cut, it will be about the forward guidance. We're going to see if we get hawkish, neutral, or bearish. Hawkish or bearish guidance is probably going to be the way we're going to put some trades on. If we're coming in fairly neutral, then I would sort of keep a powder dry, wait for a break, or wait to fade in any of those moves. and it'll probably go back to the dollar side of things. Thank you very much for listening. If you need anything from us, please let us know at ATFX. Thank you.